Wall Street is euphoric again. This time, it's AI infrastructure. And yesterday, one small cap stock may have confirmed the trend. Most investors still chase the obvious AI names, but smart money is already rotating elsewhere, into the next layer of the AI buildout. Hi everyone, I'm Kevin. I don't tell stories. I focus on data and logic. So if you really want to understand what's happening in the market, make sure you're subscribed. Now, let's get straight into today's analysis. We need to talk about what just happened in the AI infrastructure trade, because yesterday's session changed everything for Poet, one of the hottest small cap AI stocks right now, and Wall Street is starting to notice. If you're inside the community, you already know this. We've been watching this setup very closely, especially over the last few days. And the reason was simple. Poet didn't need hype anymore. It needed validation, a real commercial catalyst, something strong enough to justify the valuation. The same valuation Wall Street already priced in, and yesterday that catalyst finally arrived. The stock absolutely exploded higher. Now investors are asking one big question. Was yesterday just a momentum squeeze, or is this the beginning of something bigger? A major re-rating driven by AI demand. Because the news itself was actually very significant, Poet announced a $50 million purchase order. The order came from Lumal Lens. But that's not the biggest part. Management said this is only phase 1. The full agreement could exceed $500 million. And that changes the entire conversation. Inside the group discussion yesterday, we talked about one key thing. The market was already betting on future AI demand long before the fundamentals caught up. Remember this. This was a company making barely any revenue, just over $1 million annually. Yet it traded like a billion-dollar company. Yesterday's announcement changed that narrative. For the first time, revenue growth may finally align with the broader AI infrastructure story. But we also need to stay realistic. This stock has entered an emotional phase. Right now, momentum is fully in control. Once a stock enters this kind of euphoria, continuation depends on one thing: more contracts, more hyperscaler demand, more proof that AI spending is accelerating, faster than Wall Street expected. That's what the market is watching now, especially heading into today's session. This is becoming one of the clearest examples yet. Capital is rotating aggressively into AI infrastructure. Not AI hype, not consumer AI headlines, infrastructure, semiconductors, photonics, networking, compute expansion. That's where institutional money is flowing. Let me know in the comments below, have you been following this POET move? Because this has become one of the market's most aggressive momentum trades right now. But before we move on, let's zoom out to the broader market. Because yesterday's rally wasn't isolated. The market still carries a bullish tone today. A lot of investors are focused on China now, especially trade negotiations and policy developments. The market believes lower trade friction could ease inflation pressures and support global growth. But here's the important part. Wall Street already anticipated much of this. That's why capital has been flowing aggressively into the QQQ, the Mag 7, and high beta AI stocks over recent sessions. The market positioned itself before the narrative arrived. So now the question is, what's the next catalyst? Because markets don't move on good news alone. They move on changing expectations. And right now, expectations are rising fast. Now let's talk about Palantir. Inside yesterday's discussion, we focused on one key level, a very critical level for the stock. And yesterday, we finally saw why. Because this tells me something very important. Institutional demand for AI software and defense-related AI infrastructure is still very strong, even beneath the surface. Personally, I think Palantir is at a pivotal moment. If buyers reclaim momentum and break above resistance, the stock could have room for another expansion higher, But if momentum fades again, we could easily see another downside rotation before the next breakout attempt. So this becomes a very important chart to watch today. And this is something I constantly remind people inside the community. You cannot become emotionally attached to a stock. You have to follow liquidity, you have to follow momentum, and most importantly, you have to recognize when institutional positioning starts shifting, because in this market, capital rotates fast. Now let's move over to semiconductors, specifically Intel. I've been consistently bearish on Intel for a while now, especially inside the group discussions. And honestly, the thesis continues to play out almost exactly as expected. While the market rewards AI leaders, Intel continues struggling for one major reason. The company still lacks a convincing position inside the current AI capital cycle. And that matters because this market is no longer rewarding legacy positioning. It's rewarding companies directly tied to next generation compute demand. And right now, Intel simply isn't leading that conversation. Yesterday, the stock approached another important level. And even if we see a temporary bounce today, I still believe Intel rallies are likely to be sold, unless the company can fundamentally change the market's perception around its AI positioning. Now let's talk about Meta, because this chart is getting very interesting. Yesterday, Meta moved almost exactly as expected during the morning market briefing. The stock pushed higher, it tested resistance, it struggled briefly at that level, then it started consolidating. But zooming out, I think the bigger setup is still developing. What I'm watching closely is whether Meta is quietly building the foundation for another major move. A move tied to AI monetization and accelerating advertising growth. Because eventually, if higher flying AI trades start cooling off, capital could rotate into large cap names that still have room to catch up, and Meta could absolutely be one of them, especially if the market starts rewarding AI monetization over pure infrastructure speculation. So heading into today, I'll be watching closely to see whether Meta can keep consolidating above support levels, while buyers slowly build momentum underneath the surface. Now, overall, here's my biggest takeaway heading into today's market. The AI trade is no longer just hype. It's becoming a full capital cycle, and every single week we keep seeing more evidence that institutional money continues flowing toward companies connected to compute expansion, networking, semiconductors, photonics, and AI infrastructure. That's the real story right now. Not the headlines, not the noise. The capital flows. And in markets like this, understanding where liquidity is moving is often more important than reacting emotionally to short-term volatility. Thanks for watching. If this helped, make sure to like and subscribe. Drop your questions in the comments. I'm Kevin, and I'll see you in the next one.